Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Welcome back. Great to have you with us. Unfortunately, Phil is not available today, so standing in for him, Alex Whitlock, really pleased to be your host today. Look, as we approach Christmas, we are in a fantastic position in terms of the property markets. And not just in terms of the property markets, we're looking at an incredibly low interest rate environment. We're getting, thankfully, away from all the panic around COVID. The economy is looking more stable. So we're in a really, really fantastic position. And in terms of property markets, there are bright spots all over Australia. But I wanted to take a particular focus today, looking at one of our capital cities, and just to take a deep dive into one particular market. Now, I'm really pleased to welcome back to the show the directors of Streamline Property Buyers, Melinda and Scott Jennison. Many of you who are regular listeners will be familiar with these guys. And we're going to really sort of pick their brains and get a bit of a deep dive specifically into Brissie. Guys, great to be with you again.
Thanks for having us
Alex,
again.
Thank you.
We are at a remarkable state. Before we start looking specifically at Brissie, what a fantastic position we're in terms of the property market right now.
Yeah, we're really thankful off the back of COVID-19 that we've come out. It seems to be, the market is roaring, and who would have expected, 7-8 months ago that this is where we'd be at this time. But off the back of, lots of changes in government stimulus and interest rate cuts, and, now consumer demand has really peaked, and we're certainly seeing strong demand here in Brisbane.
It's really interesting at the moment across, sort of many of the markets, the demand is strong, but in many markets, the supply is still fairly tight, which is one of the things that's putting a little bit of pressure on prices. Are you finding that in your market up there?
Yeah, there's definitely low listings, and the numbers, as you've said, the buyers are out there. Listing numbers are low, and there's a bit of a forecast that it probably will stay a little bit low. We're yet to see that, obviously, early in the new year. Hopefully things will pick up a bit and some more properties will come to market.
I think one of the really pleasing things about the marketplace right now, and just sort of looking outside of the availability of property, is really access to finance. And, for most investors, finance is critical to making a purchase. There are very few that would pay with cash. And even those that may have the cash to buy property outright usually will choose to use, the power of leveraging to get a better return on their investment. And banks and non-banks are in the market to lend right now. And that's a really good thing for everyone out there.
Yeah, it sure is. And I've actually drawn together some data for Queensland to bring this back to how it's relevant to Brisbane in relation to finance. I've got the latest lending data showed that first home buyer numbers are up 70% year on year based on lending here in Queensland. And then the value of housing commitments for finance, excluding refinancing, that's increased 40.2% in Queensland over the September quarter, and that accounts for about 31% of the uplift in finance nationally. So it gives a bit of a leading indicator in terms of where people are, borrowing money and where they are putting their money in terms of the property markets. And it's certainly something that surprised us when we looked at the most recent data.
And we're in a really unusual position as well, where you've got the RBA really stating that rates are going to stay low, not for the next couple of months, but for the next several years. And that's you guys have been in the property market for a long, long time, advising, recommending and buying on behalf of clients. Have you ever known a financial environment like this where we've got such surety around low interest rates?
Yeah, no, it's certainly been a market where, money's never been cheaper. And I know that, we often talk about when we were first borrowing money for our own investments. And I think Scott was paying interest rates over 17% back in the day. So, while interest rates are this low, it's almost, free money for people. And it's certainly provided the incentive that people have needed to get back into the market and have the confidence to continue to invest.
It's actually 19%, Alex.
So I'm going to guess that was that sort of late 80s, early 90s, that kind of,
yeah, correct. Yep, late 80s.
Yeah.
It's funny looking back and reading some of the, some of the old books. I was a big fan of Jan Summers, sort of way back, and some of the interest rates they would talk about back then are just mind blowing. Sort of 17, 18, 19%. I mean, when I first purchased, I paid in sort of the very late 90s, I paid about an 8% interest rate on my mortgage. And I was led to believe, and I felt at the time that was actually quite a good rate compared to where they'd been before.
Absolutely. And I think that, it's definitely something driving the market. I think from a lending perspective, there has been some concern until recently that there was going to be that mortgage cliff. And I think a lot of property buyers were a little bit nervous about what may or may not have happened if, people couldn't repay their mortgages. But even there, the housing loan deferral data is now starting to show that, there's been a decline, I think, of almost 70% in the number of people that have had their loans on mortgage deferrals. So it's all looking very positive for the future and, less likely that we're going to see any forced selling off the back of the changes caused by the pandemic.
Really good position to be in. Look, we're going to take a very quick break there. And when we come back, let's start having a closer look at the Brissie market.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back. Great to have you with us. Look, before we take a snapshot of the market right now, it would be really good for a lot of our listeners tuning in who've maybe not experienced the Brissie market before to get a bit of an overview of what the Brisbane market is usually like, how it's been historically, and that sort of tees things up for where the opportunities lie right now.
Yeah, look, it's a good question. Brisbane hasn't performed very well historically when we look at the last 10 years in comparison to the markets of Sydney and Melbourne. We've had a fairly flat growth rate over that period of time. We were gaining strong momentum at the beginning of 2020 until the pandemic hit, and we were seeing some really strong price growth in certain pockets around the city. More recently, off the back of the pandemic, certainly in the last 2 to 3 months, we've started to see that momentum increase again. And we've seen price growth now for the last 3 months consistently. And that's specifically in the housing market. The unit market is performing a little bit differently at the moment. And I think that's caused by a shift in the way people want to live and also a shift in the fact that the international borders are closed and there's less demand for those higher density dwellings, which is similar to what we're seeing in Sydney and Melbourne.
And in terms of migration is always a key driver for any property market. It's something that everyone looks at very, very closely. We've obviously got no overseas migration at the moment, but what kind of sort of interstate migration are you seeing up there?
Most of the interest that we're getting and the inquiries we're getting are probably Sydney and Melbourne, looking to buy up in Brisbane. A little bit of a mixed bag, some to relocate, some just to get into the property market as an investment as well.
Yeah, I think that we've had some inquiry also from expats that are returning from overseas. That market, we've seen buyers buying property in Brisbane here sight unseen so that when they come out of their 2 weeks of quarantine, they've got somewhere to go. So there's been, a number of people coming into Brisbane. Predominantly interstate migration drives our market in terms of population growth, but we are also seeing expats starting to return as well. And they are, spending big in the market, trying to get access to something so they've got somewhere to call home when they do return.
One thing I'm really interested in on a sort of a personal basis, so being based down in Sydney as I have been for the last 20 years, typically and anecdotally, the people that I would talk to would usually be retirees who are looking for better value by moving up to Brissie or the surrounding areas. They're looking for a sort of a better lifestyle, a warmer climate, but it's really about that sort of getting more of a bang for your buck for your retirement age. I'm just interested to know with, the shift in the way that we work now, more people are looking to work remotely. I think businesses are starting to rethink the way that employees work and interact with the office. People are working, permanently remotely. Are you seeing any kind of change in terms of the demographic moving up to Brissie?
Look, at this stage, we are definitely seeing the interstate inquiry come through for home buyers that are happy to live in Brisbane for those reasons that you've outlined: affordability, lifestyle, just to get away from the hectic lifestyle, I guess, that Melbourne provides. And they have indicated that their reasoning is partially due to the fact that they have the ability to work remotely. That said, there's been some commentary around a broader shift in terms of people relocating to some of the regions that, are not within Brisbane itself, but, we've heard an hour's commute. Now, an hour's commute to Brisbane can be an hour's commute when there's no traffic, but because we've got quite premature infrastructure in terms of public transport options, living up the coast or down the coast, especially with the train network that, we've got in place at the moment, it can be much more than a 1 hour commute. So anyone that does need access to office space in the CBD here in Brisbane, or indeed anyone who needs to commute to the largest hubs of Sydney and Melbourne, generally we're finding that they are relocating to Brisbane more so than the coastal regions, simply because accessibility and timeframes for commuting easily to some of those employment hubs, we don't have that public transport system in place to allow that to be an easy commute at this time.
And looking at the market, sort of breaking it down to into its sort of price brackets, what kind of sort of segments of the market are you seeing starting to, or showing signs of performance over the next coming months and years? Is it the sort of the lower end bracket? Is it the middle tier? Sort of where are you seeing the hotspots at the moment?
That's a great question. And my answer is we're seeing it across all levels of the market. I think first home buyers have really been driving the lower part of the market up to the $500,000 price point. We've seen a lot of vacant land sales in that market as well, driven off the back of home builder package and other government stimulus that's being put into the hands of first home buyers. But the middle ring suburbs of Brisbane, based on our own on the ground experience, I feel that's probably one of the hottest segments of the market, price points between sort of 650 and 900,000. We're seeing a combination of first home buyers, a combination of upsizers, those getting into their second property, as well as investors who are looking for, a good combination of capital growth and, a reasonable rental return. And then when we're looking at the top end of the market, we typically don't deal in properties over the $3 million price point, but we're certainly hearing from agents who do that it's one of the strongest performing segments of the market here in Brisbane, because again, bang for your buck, what you get at that price point here in Brisbane in comparison to a lot of the other, rather Sydney and Melbourne, it's really an affordable style of living and you are getting a premium product. So for those that have the capacity to buy at that level, according to the agents we're speaking to, it's really got momentum as well. So we're seeing it across all segments of the market at this stage.
As an investor, you're obviously looking for capital growth, and it sounds like you've got a good opportunity for capital growth across all sort of price segments. But one of the key things for investors, you've got to look at then, so the balance between, potential for capital growth and then also a good yield from your rental income. And I don't know, maybe as you get in those higher brackets, that sort of $3 million mark, maybe you start to get a bit of a gap between the cash flow generated by the rental and, sort of what you need to pay on your mortgage. What kind of price bracket do you feel, or what kind of, give me a bit of an insight on the types of properties where you've got good scope for capital growth, but you're also hitting that sweet spot where you're getting a high rental return?
Look, I think that the strategy in terms of the balance between rental yield and capital growth will come down to an individual investor's strategy and what's right for them, and it'll also depend on their taxable income brackets, etc. So it's really about tailoring something that's specific for an individual. A lot of people come to us because they're buying in Brisbane, they're wanting something that is a fairly neutral yield. When we look at cash flow position, that depends largely on the way they're borrowing the funds. Obviously, leveraging at 80% with a cash deposit can potentially produce a cash flow with 4.5% gross yields. But if you're leveraging at 100% plus costs, then your cash position might be negative in that instance. So, there are sweet spots where you're getting a 4.5% to 5% gross yield, and your purchase price is probably around that $500,000 mark or less. As you move to areas where capital growth potentially is slightly superior, price point will increase and your yields will decrease. So there is an inverse relationship off the back of the data that we look at for Brisbane. The higher the capital growth historically, the lower the rental yield. So anyone looking for something that's fairly neutral, again, depending on their lending structure, that sweet spot is around that $500,000 price point. Anything above that, and you're starting to look at having to put in some money to hold the asset, unless you're putting in more cash up front and leveraging at a lower percentage.
Just on the local market at the moment, Alex, as well, that 500,000, that's probably a number to start with. We're finding at the moment, the current market, anything under 500, it's really hard to get. There's low numbers on them. There's a lot of people after that. So your product tends to drop in the quality a bit. You increase your maintenance costs and your holding costs side of things. So it's a tough market. So if people are looking, I would probably start at that 500 and work your way up from there if you could.
Make a really good point there, Scott. And I think it's sometimes something that investors, myself included in occasions, tend to conveniently forget. You you go into the lower price point and it's very appetizing. You pick up a bargain at sort of $300,000, $350,000, and you look at the potential yield on the rental with also the potential for capital growth. But then you find that the asset that you've bought requires significant maintenance, and it is an erosion of that cash flow, and you can end up then dipping into your own, into your own finances to make those repayments because you're having to fill in with maintenance. And it's happened a couple of times. So I think that's a good point to consider.
Yeah, and I think that a lot of investors, fail to factor in those maintenance costs, and it is critical because it does eat into your gross yields, and then your net yields become something that's, less impressive. So you've always got to consider that the costs of maintenance are the same on a property, regardless of where that property is located. And if you're purchasing, at the compromise of getting good capital growth just because you can, get a better rental yield, then long term, it might put you in a worse off position in terms of wealth creation.
And just looking at the market as a whole, I would imagine that Brisbane is going to break down into sort of suburbs and various areas in terms of potential for capital growth moving forward. Let's just look at simply north, south, or west. Where are the geographic areas at the moment that you are seeing the most potential?
Yeah, look, obviously we've got no certainty around what the future capital growth will be in any location, but we can look to the past to get an understanding of what's happened. And then we can also look to the future in terms of supply and get an understanding of how that may impact capital growth, because capital growth really is the balance between supply and demand. And we want to make sure that we've got limited supply and high demand in any market moving forward. The analysis of Southeast Queensland land shows that the majority of greenfield land space is still condensed within the Ipswich and Logan regions, as well as the northern parts of the Gold Coast Shire. When you're looking north, the corridor for land development or greenfield land space is a lot narrower. So the Moreton Bay Shire still presents with some opportunities in a lower price point, especially in that area where people are looking for slightly higher yields. But historically speaking, and certainly from a land availability perspective, the Brisbane City Shire still has a lot of opportunity for capital growth. There's still some infill development opportunities. So, future growth nodes, people need to be aware that Brisbane today is not going to be the same as Brisbane 20 years from now. So we're always looking at the potential for future supply. We know that the number of high density units that went in off the back of a change in the city plan in 2014 really had an impact on that inner city market, both in the unit space and in the housing space. There's other nodes in Brisbane, or growth nodes as the council refers to them, where they do intend to develop higher density dwellings in the future. So it's having an understanding, not just of Brisbane today, but Brisbane in the future, so that you're not going to be negatively impacted by that future development, and buying in areas where it is land banked, there's no more land available, but also potentially where that land is not zoned for higher density development in the future, because that can also have a runoff effect in impacting capital growth as well.
But let's take a very quick break there, and we're back in just a couple of seconds.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back. Great to have you with us. Taking a deep dive in the Brissie market. Fascinating view. Just looking at the marketplace at the moment, what kind of, we've talked about a shortage of supply. We're seeing it nationwide. How is this impacting the Brisbane market? And really, realistically, as an investor, how much of a window do you get to get into the marketplace before things are getting snapped up?
I mean, look, in Brisbane at the moment, probably just some local on-the-ground stories, I guess, and most of the properties we're looking at the moment, they're either going to auction or selling prior to auction. Multi-offer is very, very common at the moment. Pretty much most of the properties we're looking at, they're going to multi-offer. We've had a couple recently. There was over 100 groups went through one. 11 offers went in on that Saturday, and it was sold straight away. Auctions, we're probably 20 registered at an auction at least. And another one first open, we had a look at a property for a client, and there was 37 groups through that. So there's huge demand, and that you've got to move quick on them. I think the best way from our side of it is to be prepared and have all your conditions as tight as possible to be able to purchase something.
And in terms of potential growth, and I know it's not necessarily going to be Brisbane as a whole, but give me, I think our listeners tuning in would like to get some sort of scope for what the expectations can be for Brissie over the next sort of 12 months and beyond. Because we've been here before with Brissie, we've looked, it's felt like it's been on the cusp of, a good turn of growth, and it hasn't really quite delivered. What are we looking at this time? And tell me what the fundamentals are that really are going to move Brisbane forward this time around.
Yeah, look, we've been through 12 months of predictions that have changed from, 23% growth to negative 40% growth. And now we're back up to predictions of up to 20% price growth. So we really have been through a turbulent time in terms of some of those forecasts. From our perspective, based on what we're seeing on the ground and based on current market conditions, we certainly see strong growth in the next 12 to 18 months, just off the back of tight supply. The conversations we're having with sales agents indicate that they don't have a lot to bring to the market early in the new year. I don't think we're going to see a lot of forced selling, so we see supply remaining tight into the future. Building approvals are still relatively flat here in Queensland. We've had, an increase off the back of the building incentives for first home buyers, but that's typically greenfield land, not inner city buildings that can have an impact on capital growth in the future. From the demand side of things, obviously interest rates, as you mentioned earlier, Alex, the RBA have indicated that they will be lower for longer. So we're looking ahead at 2 to 3 years of low interest rates. That puts more cash in people's hands. We're also seeing an influx of interstate migration here in Queensland. That's continuing to increase the number of homes and the housing that's required to accommodate people, so demand further increases. And we've got so much infrastructure coming through in Brisbane at the moment. It is not going to be the same city 5 years from now. We've got huge projects that are going to change the way we live and the way we commute. Some of those projects will be improving our transportation options, such as the Cross River Rail and the Brisbane Metro, and that will really open up public transport options for Brisbane commuters. But we've also got a lot of lifestyle infrastructure projects as well. Things like the Queen's Wharf, major projects that will change the way we live and will actually put Brisbane on the map for people that are wanting to travel here and not just bypass through. And at the moment, we're certainly not seeing international tourists, but we are seeing a huge influx in Queensland from the southerners coming up to holiday now that the borders have reopened. And, all of that contributes to the demand for quality property in southeast Queensland as a whole.
Well, that paints a really good picture, Melinda. And I can see, we know that there is a tightness of supply at the moment in terms of those that are purchasing. How about the rental market at the moment up there? Can you give us a bit of an insight into, where it's tightest, if there are any areas of oversupply, and then, so correspondingly, for those that are looking to invest and thinking to invest, where they might want to either aim for or maybe steer clear of in terms of ending up with sort of either a lower rent or maybe a property that ends up being vacant?
Yeah, we've definitely seen a shift as a result of the pandemic in the rental market. There's been high vacancy risk in the inner city, high density unit space. And at the peak of the pandemic, we saw vacancy rates as high as 14% in the CBD in those high density units. The runoff is that it is still high. It's over 10% still as at the end of October. We're also seeing some vacancy risk in and around the university precincts, around Kelvin Grove, around St. Lucia. Vacancy rates in those locations are also high. Typically, a lot of students that potentially would be coming from overseas would be occupying those areas and they're just not there. So investors that are looking in those markets do need to factor in vacancy risk. A lot of people fail to think about that when they're considering an investment option. Now, very different in the housing market, very, very different, and especially when we're moving into the inner and outer suburbs. Vacancy rates in the housing market in most Brisbane suburbs are at record lows. So, we're seeing situations where properties that we're purchasing for some clients are being advertised the day that the properties are being settled, and they're getting applications sight unseen from tenants because there's simply not enough stock available for the number of tenants that are looking to secure a property. So vacancy rates in many areas are less than 1.5%. In a lot of suburbs, when we're looking at a suburb level, it's less than 0.5%. So you can imagine how people are scrambling just to find somewhere, to live at the moment. It's becoming dire in some areas.
That's a really tight market. Anything typically below around about 2% is a hot market. And if you're talking about, sort of vacancy rates getting down to 0.5, they are going like hotcakes.
I was just going to say it translates over into what people are prepared to pay. So we are seeing price growth in the rental market. between the 31st of March and the 31st of November, we've seen price growth of 1.2% citywide in Brisbane in the housing market. But as I mentioned, with that risk in the high density unit space, we've seen price declines in the rents that are being achieved, negative 1.9%. So there's definitely been a divergence in the unit market and the housing market when it comes to rents, and understanding what's happening in those two markets is critical for an investor before they make any investment decisions.
So for investors who haven't invested in Brisbane before, maybe looking, there's a lot to think about in the marketplace right now. There's a number of the capital cities that are showing sort of great opportunity, but it's not just about a capital city. It really boils down to individual suburbs and individual markets. But for those that are eyeing the Brissie market for one reason or another, what kind of time frame should investors be looking to be in that marketplace to get the kind of returns that they need? And I know you may say that some people have a strategy of holding for the very long term, but what, in terms of a minimum sort of time frame, should people be looking at?
From an investment perspective, I always say property is a long-term investment and people shouldn't be looking at property for short-term returns. I think there's other asset classes that are a safer option for short-term returns because the transaction costs are so high in property. That said, I think there's plenty of opportunity in Brisbane for manufacturing equity very quickly. We are in a rapidly appreciating market. What we were purchasing properties for just 3 months ago, we're having to apply sometimes 5 up to 10% on top of the previously appraised range to secure properties, just driven by the FOMO, I guess you could call it. A lot of the market movement is being driven by home buyers. So, investors really have to consider whether they're prepared to compete with what a home buyer is willing to pay. At the end of the day, if they're working strictly on numbers, they may keep missing out. So will the market fall back at some point in the near future? Look, no one knows for certain, but we can't see that happening because for every property that we're seeing, there's 10 or 15 buyers that are putting forward offers. So, we need to see a huge increase in the number of properties that are available for sale just to absorb the number of buyers that are out there at the moment before we see any price softening. So, on the back of what we're seeing on the ground, we can only see prices going up. We're certainly seeing it in real time. It's not trending through to the data because obviously data is retrospective, but we're out every weekend at auctions and participating in multiple offer situations. We've got to get all of our ducks lined up before we're actually physically inspecting a property because at that first open, anything that is listed is selling same day. So, that's how quickly things are moving. And as I mentioned before, we're seeing this at price points over $1 million, between 500,000 and $1 million, and even in the price points under 500,000. We are seeing it across the market in all segments at the moment.
You make a really important point there, Melinda, and I think it's something to take note of, from an investor perspective, is that you say that the market is being driven by home buyers. And that's a really fundamental thing in terms of the potential for future growth. Because when you've got a market that's driven purely by investors, it can end up being a little bit fragile because if something happens, something changes in a particular location to vacancy rates or other fundamentals, or maybe interest rates, you can see investors disappearing fairly quickly. So I think that's a really interesting point to note.
Yeah, and I think even if we circle right back to what we spoke about right at the beginning in terms of lending data, investor lending is at historical lows. So it helps us understand who's actually driving the market rebound across all of Australia. I do think that investor activity in Brisbane is probably slightly higher than other states, just off the back of the fact that we've got some higher yields to offer. Other states like Perth might also be on the radar for investors for that reason. But, there's some nervousness, I guess, for investing in other capitals where the yields are much lower at the moment. But yeah, Brisbane's got a lot going for it. We've got attractive yields. We've got the potential for strong capital growth in the future, that the market conditions are such that, we see that there's going to be strong growth in the next months or even years ahead. We don't know how long the momentum will last, but it's a case of getting on board before it moves too quickly.
I think it's quite interesting when you can hear us obviously talking, Alex, and the way that we can see everything here every day on the ground in Brisbane. And it's quite interesting when we see some people advertise about buying under market value. I'd be questioning how they're doing it and how they determine that, where it is and what it is, because it's not what we're seeing. Definitely, if you're buying a good investment or even a home, you're paying market value, that's for sure.
Yeah, it's hard to buy under market value when there's 5 to 10 buyers all, bidding for the property under a multiple offer situation. It does become very difficult to negotiate unless it's 100% off market, of course.
You make a really good point, Scott, and market value, if you're in a buyer's market and you've got an oversupply of property that's available right now, that's when you can chip away and you can get bargains, that are below market value. But at the end of the day, the market is whatever people are paying right now. Yeah. So it's a bit of a kind of a misnomer.
It is.
And I think it's also understanding from an investor perspective, understanding the momentum that is behind a market when there is good fundamentals that's driving growth, understanding where the market's going to be in 12 months, in 24 months, in 36 months, and then the longer term, sort of infrastructure plans for the capital city or the region you're buying, and what's going to drive that market moving forward. So it does feel that Brissie's time is finally coming around. Scott, we're going to have to round off fairly soon, but Scott, I just want to get a bit of a snapshot from you about the types of properties, the types of buildings, the types of opportunities that investors should be looking at or that particularly catch your eye at the moment.
Well, as Melinda mentioned earlier, anything you can manufacture equity. That's something we're seeing a lot of. I'm helping so many clients at the moment buy something where we can just add a little bit of value to it, give it a lick of paint, new kitchen, whatever it may be. Just to improve, again, that improves your rent. It also improves the quality of the tenant. It reduces maintenance ongoing. So that's the sort of thing that I see. Generally, houses here in Brisbane are tin and timber. They've got asbestos, so people always question me about that. Don't be scared of it. There's nothing actually wrong with it as long as you don't break it up. But it's your tin and timber homes. You can actually change them and make them a lot more modern inside and more contemporary, and it suits the lifestyle up here as well. So anything that you can probably manufacture a bit of equity, I think that's gold, definitely.
I'm going to put you on the spot before we round off. You can either give me a suburb that first-time investors in Brisbane ought to be looking at, or you can give me a price point. Which is it going to be?
That's a hard question to answer. I'll give you a price point. And I think that a sweet spot for investors is probably between that $650,000 to $750,000 price point. It's where the median value for Brisbane City Council sits. So you're competing in a market where you've got the largest number of properties that you can choose from, but you've also got the largest number of buyers looking in that space. And therefore, that's where the greatest demand sits. So from an investment perspective, you've always got to consider who the next purchaser will be for the property. And if you're sitting around that median value, it's the safest space. And then if you're able to secure a property where you can add some value, secure a quality tenant, set and forget when you go to sell in the future, or whether you're going to rely on the income that property generates for you, you're still targeting that middle section of the market. So I think that's the safest bet for investors in Brisbane.
I can probably give you the location if you want, Alex.
Go on, fire away.
Transport.
That's what people want.
Transport.
Very good. Just finally, in terms of that price point, is there a sweet spot in time in terms of the size of block of land or the number of bedrooms? Are there any other things that you would look to focus on?
That's going to depend on the actual suburb that we would target within that price point, to be honest, because in Brisbane we have suburbs that are dominated by pre-war homes, other suburbs that are dominated by post-war homes, other suburbs that are dominated by homes that were built more in the 60s and 70s that are more brick and tile. So I think that the size of the block is determined by the location of the suburb. Typically, more so than the size of the block, we look at the value of the land based on a square metre basis, because the unimproved land value, a 400 square metre block closer to the CBD is going to potentially be worth a lot more than further away. So it's more about the value per square metre of the land. And if you're in a location where you're in that sweet spot, but you've got a smaller block of land, that actually might be a better investment if the land to asset ratio is higher than buying a larger block further out just for the sake of having land underneath you. So it's all about the land to asset ratio and maximising the amount that you're paying for the land, minimising the amount you're paying for the house. When it comes to investing, that's a great strategy to follow.
I think that's really fantastic advice, and I'm so grateful for your time. It has been a long time since we caught up, probably 18 months, but I know you've been on the show a number of times with my business partner, Phil. Really appreciate your time. Really valuable to get a really detailed snapshot of one of our capital cities. Melinda, Scott, thank you so much for joining us.
You're welcome.
Thanks
for having us.
For everyone else, thanks so much for tuning in. I think it's really valuable to take a deep dive every now and again into a capital city. Look, we're not saying that Brissie is any better than anywhere else, but I don't know. It feels like Brisbane's time is kind of coming around. It has underperformed for quite a long time. So it's really valuable to get an insight into exactly why it's going to perform in the future, what you should be looking at. some of the fundamentals around, the value of money at the moment. So, if you're interested in looking around, do check out Brisbane, get some advice, get good advice from a mortgage broker, an accountant, and certainly a buyer's agent. That's certainly the philosophy that myself and Phil have used for many, many years. Look, if you like the podcast, please do rate us. Make sure you share. Make sure you tell your friends. We do very much value your feedback. Don't forget to check us out. We are on all the usual social media channels. I'm Alex Whitlock, standing in for Phil Tarrant. Thanks so much for joining us. We'll catch up with you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.